Hi there, this is Robin Hart with the Home Loans of the Hart team of CMG, and this is our weekly market watch video where we tell you all the craziness and nuggets that we have going on in the mortgage world. Let's dive in. We always try to start it off with the rates and check it out and see what's happening. Rates are, well, unfortunately, they are higher. Now, the 30-year fixed, now this is a 7-day average delivered by Mortgage Nuggets from over 200 lenders across the United States. So keep in mind, it is not a rate quote, but the 7-day average is coming in for the 30-year fixed around 6.38. Now, VA and FHA on the 30-year are coming in right at 6%. So they are slightly elevated, and we can see it until the foreseeable future, perhaps in December when we start getting more economic data out. We're going to start seeing hopefully a little bit of a trend lower. Right now, there is a lot of hesitation in the market. What's happening is because during the government shutdown, we didn't get any information. So the bond markets really didn't like it. They also don't like the inflationary pressures that are happening with tariffs. So guess what? They are also not really liking a whole lot of the market activity and what they're seeing. So pretty much bond markets respond negatively, winds up raising the rates, no matter what the Fed's doing. Now, in October, foreclosure activity rose again. Now that's up 3% from September and 19% year over year. Now these sound like astronomical numbers, but keep in mind, they're still historically low numbers. If you look at it, basically, you could say we went from 1% to 2%, and the headline could be, foreclosures double. So keep that in mind. The context is we've come from a period of historically low foreclosures overall, and we still are at a historically low foreclosure rate. Now, Florida leads those in one in every 1,829 homes. South Carolina came in second, Illinois third, Delaware, then Nevada, Ohio, Iowa, Maryland, Utah, and California. So pretty much major states of Texas have not been hit. Neither has Tennessee or Georgia. So guess what? We're still looking okay, even if you see these crazy economic headlines. All right. Now, affordability woes. This is what people are saying are triggering it. Things like taxes, homeowners insurance, and the high cost of the interest rates currently, because they are higher than what they were 5 years ago. So guess what? As we see affordability woes with homeowners, we're actually seeing investor purchases climb as well. Now, previously, earlier in the year, it was around 20% of all home purchases were investors. Now it's actually climbed up to 30%, and it might climb as high as 38%. Hint, they basically are looking for opportunities in the market. What this means is that they're looking for sellers who are willing to let go of their properties for perhaps a little bit of a haircut on the purchase. So, home buyers and home sellers, guess what? Be aware of this market activity. We love our investors, but home buyers, honestly, if investors are diving in, you might want to take a look if you are prepared for home ownership. Now, let's get to the fun stuff. This is for my Yellowstone fans. All right, guess what? I'm a huge Yellowstone fan. So guess what? This is kind of cool. The return of bison to Yellowstone has actually reawakened some of the world's oldest national parks. And the herbivores returning to Yellowstone, it's actually restoring some ancient patterns and reshaping the landscape from the ground up. Now, apparently, just by grazing, trampling, and fertilizing the land, they create a mosaic of habitats that support a wide variety of plants and animals, and basically from insects to predators. So that's kind of cool. Love it. And they taste good. So there you go. And here's our meme of the week. Here's a picture of my Christmas tree, which is still in the shed because it's November, y'all. Every week and every day, I see more and more Christmas lights up. I think some people are just like, the heck with 2025. We're over it and ready to move on into 2026. So hopefully the holidays are coming fast and approaching. You still have time to get into that house by the end of the year. So with that, when is the best time to buy? Well, it's when you are ready to buy, number one. And number two, when the market has softened and you get some better buys on the purchases. As a matter of fact, last 3 deals that I have done and executed, buyers walked in with additional equity and the sellers were paying the closing costs. So It might be a right time for you if you've got a job, if you've got savings, if you have taken good care of your credit. Might be a good time to look at it and see if it's the right time for you to buy. So now, if you like this video, please follow us on any of our social media outlets. We're on LinkedIn, Facebook, YouTube, The Artist, formerly known as Twitter. I'm Robin Hart with the Home Loans with Hart team, where we are here to help you build wealth through the financing of real estate. So have a great week, and I'll catch back up with you soon.